Evening, everyone. It's Sunday night, and although tomorrow is not an open day for us, it is around the rest of the world. And so the chart on the screen is the gold, and this is video number 635, your Sunday evening update for the gold market. This market is actually really beginning to concern me. I just don't get it. We have a dollar that is dramatically weaker. We have other commodities that are world commodities that are quoted in dollars that are moving up on that basis. I guess the only thing that I can really look at clearly and say is a problem would be interest rates. The 30-year, let me show you where the 30-year is, and we'll come back to the gold in a minute. The 30-year is actually down again tonight, another 30 seconds, which is 3/4 of a point. And that's a fairly serious break, especially since we gapped to the downside. It's kind of unusual. We don't usually see many gaps in here, unless, like here we saw a tiny little gap, but that was on the basis of a bottom and turning higher. I guess we could say this is exactly the opposite. This is a close near the low at the low for the week and down on the week, and then a move lower. It's a little confusing. Not so much because it's interest rates versus the gold. It's because it's interest rates versus the gold, but not the silver, and definitely not the platinum. As Dennis Marlowe has pointed out repeatedly, the platinum is much stronger. I mean, this is the chart on the platinum, and it's nothing but moves from the lower left to the upper right. I mean, this is recovery highs. But what's also important is, even though this is a recovery high, look at where we are. I mean, this is a great move to the upside, but we're still dramatically below. This is 2008. And in 2008, I guess the high was around 2100. Actually, pardon me, 2300. And we came down hard, and since then we've been gold above platinum, which, as I said, is really unusual. And so, why would the platinum be up and the gold be lower? Same situation right now. The gold is up 360. The silver is up 35. And the silver, although it isn't as strong as the platinum, is also moving higher and looking, at something a little more realistic than 30 years of prices. We look at this over the last 2 or 3 years, and again, like the platinum, it bottomed and it has moved higher. And even though we're well off this high, which was just a couple of weeks ago at 30 and a half, 30.35, a new recovery high, we're not going down. I'll show you the gold chart again, and you'll see exactly what it is that I'm talking about. It's kind of confusing, because while I understand the relationship with the dollar, I don't understand why, gold should have a downward facing chart, and silver and platinum should have them up. I mean, there's not that much use of silver and platinum, enough to have it turn the way it has. Now, this is the weekly, and it's a 3-year chart, and it's fairly constructive. It's still holding above this orange line, which is the 50-day. This is the 100-day, and this is the 200-day. On a daily, though, it doesn't look anything like this. On the daily, the 2-year is down, and we're below all of those moving averages. I'll show you on the year. You can see it. It's pretty obvious. So while we're not breaking these lows, we keep on falling back to them. So anyway, um, I do like the metals. I do like the Newmont. And the fact is, the Newmont is a great company, and it's the only major mining company that's in the S&P 500, which means that any fund that can only buy S&P 500, if they want to get into the metals, they have no choice of where to go. There is nothing else besides Newmont. And also, if the gold should turn back up and start moving to the upside, I mean, this is a really nice consolidation if you've just been, if you're just looking at it for the first time. You go out 3 years. I mean, it's a nice little move, consolidation, even though it's downward sloping. But my problem is these moving averages and the fact that we're hanging below them, not above them. So, when gold trends, which if you look at it, really, it still is trending higher. Newmont generally outperforms about 2 to 1. So, another 10% move from where we are right now, or 15%, which would take it to a new high, would probably be about a $20 gain in a $60 stock like Newmont. So that's where we are. Hope everyone's having a long, nice weekend. Happy Valentine's Day, and I'll be back on Tuesday morning.